Hi, you're watching Wall Street Confidential. I'm Deborah Borcher. I'm talking with Jim Cramer.
Right.
Jim, we've had so much movement in the market lately with our government, the big plan. Where do we stand now?
Okay, and this is something I'm going to address at our upcoming conference. Is the landscape has changed dramatically from earlier in the year.
I
And
almost can't keep track of it.
Well, what changed is that the shorts have been great allocators of capital. They had chosen to destroy Bear. Now you could say, well, listen, Bear. We have to back up. When I say destroy something, every single one of the situations, with the exception of AIG, could have, because AIG, I believe, is a criminal enterprise. I mean, I just believe that it just lied and lied and lied. But every single situation we have, whether it be Lehman Brothers or whether it be Bear or Fannie or Freddie, could have worked out over time had the shorts not bought credit default swaps, bought puts, pushed the stocks down endlessly, called the media, said that there was problems, had the ratings agencies downgrade, and that was the end of the institution. That cycle was supposed to be stopped by the short ban, but that was silly because it was never about common stock. It was about credit default swaps. Meaning the common stock, you could never short enough common stock to make a fortune. But if you could place an insurance contract on a house that then gets burned down, that's a full-blown win. So if you can take away the credit default swap portion where the big money was being made in a opaque market that you could lie about, then you eliminate the way the shorts chose who should live and who should die. When you take that off the table, we go back to a rational world where we say, okay, look, this institution's not doing well, avoid the stock. Not this institution's not doing well, short the stock. And that's where we are right now, which means that banks that were shorts, that were targets, State Street, Bank of New York, Citigroup, Goldman Sachs, can't be targeted anymore because you can't use the credit default swap because their debt has been basically guaranteed. What you were doing was betting debt would fail. But if the government guarantees the debt, then why would you ever have to ensure that it would fail?
So it kind of takes the CDS market off the table.
For this sector, yes.
Okay.
Now this sector was the most important sector because banks rely on confidence, and you could still do this against GM and Ford, which they've been doing endlessly. But I think that this change, which is the ruination of the free credit default swap ride against the financials, will mark a turning point in capitalism where you now have the longs in charge and the shorts no longer calling the shots. That's very important.
More healthy.
Well, what you did was you took, the preferred world is a strange world, but it had been a great bet to try to short preferreds and to short the capital structure of a bank, not the equities, but the capital structure. And if the capital structure is basically now insured by the federal government, it is not a good bet to take insurance that the capital structure will fail. That's what it is.
Thanks, Jim. You don't want to miss our investor conference. Seating is limited. Email us now at conference@thestreet.com. Spend the day with Jim and his team. Get Cramer's 2009 stock picks before anyone else. Now is the time to plan for next year. It's October 25th here in New York. We're on your side and our experts are here to help you. Conference@thestreet.com.